Start introducing the panel. First of all, my left, Marta Cladera, who's head of real estate Iberia for Nuveen. Next, David Brush, well known to us all, senior advisor, Merlin Properties. David is always bright-eyed and bushy-tailed. Today is no exception.
I do my best.
Pedro Coelho, Vice Chairman of Square Asset Management. And then we've got Volker Ray-Schmidt, right, who is Chief Executive Officer of GMB Real Estate. And finally, Andrew Angeli, Head of European Research. I'm told the company name has changed, yes, and that if I'm not mistaken, it's now CBRE Investor Management?
Correct, yeah.
Wonderful. We're up to date. To me, it was Global Investors, but we're not allowed to say that anymore. Thank you very much. Quick question to kick this session off to all of you, and we are tight for time, so I'd appreciate short, succinct answers, please. But if you had to name one aspect of the sector, of the market that has changed since we were last here 2 years ago, say, what would that one aspect be? And please don't say COVID. Marta, do you want to start?
For me, it's been partnerships. Actually, like how we have dealt through COVID with all of our partners, being stakeholders, being banks, investors, and tenants. And I think one of the key things has been like how we have had this relationship with tenants. Before COVID, we had we were trying to get over the same path and working together, and then COVID arrived, and then it all spread around. We didn't know what to do. We didn't know if we had to build them. We didn't know anything, and I think each one went to a corner. So I think that we are getting back on track, but partnerships has been, for me, like the big changer.
Wonderful. I am this time just going to go straight along the road. So, David.
Assumed you would. I would say acceleration of trends that were maybe already in place. So if you look at retail, the move toward e-commerce and online, and the kind of merging of physical and online, the movement to the cloud, so which is why so many people are interested in data centers. The world was moving to the cloud to begin with, but that's just been accelerated significantly. And the whole advent of a hybrid workspace. You know, who thought about hybrid work models even prior to COVID? But now you have to, as a landlord and owner of offices, you have to react to that. So flexibility, and I think the advent of flexible space in offices. So that accelerating trend, which causes owners to have to be more reactive and more flexible.
Pedro.
Well, I would say that to add something on the previous, and probably the next one is going to be more difficult.
Leave something for them, please.
I will add that real estate proved to be resilient, and especially, of course, different sectors moved at different speeds, but setting up a balanced portfolio proved to become more resilient than many other capital asset classes.
Next time I'm going to sit further there.
You were too slow.
I think probably polarization. So there is really there is a lot of capital out there, but everybody's chasing the same asset, which isn't necessarily good. And I think there is a lot of demand for good assets and absolutely no demand for assets that are not so shiny. So I kind of miss, maybe it's my opportunistic background, I kind of miss the times in 2015, 16 when there were actually people buying not so shiny stuff.
Andrew.
ESG issues. It's moved from a box-ticking exercise a couple of years ago to being fundamental to everything we do. In investment committee, we're spending more time today talking about improving the environments that we invest in, improving the lives of our stakeholders, just as much as we're talking about financial returns.
Okay. Just so Volker can't complain, I'm going to go back to him now. The COVID crisis has produced quite a lack of supply in many aspects of the market. Do you see that supply imbalance being rectified, being changed, or is it something we are going to remain with going forward?
I think, I mean, there is certainly a shortage of product. I'm not that sure that the shortage is due to COVID. So I think in 2020, it was true that there were only opportunistic buyers out there trying to buy very good assets at low prices, and the sellers just didn't want to sell. So the market just went on hold. That is not the case anymore. So now I think in the processes that we have running right now, we see a lot of demand. So we're back to basically the same level of demand that we had prior to the crisis, or even in some of the processes we have more demand. So on that end, I think that COVID just had a very temporary break in things. I think that the shortage of product is, I mean, I'm sufficiently unpopular already with local authorities, so I'm not going to elaborate about this too much, but licensing is a nightmare. And then if you don't get product license, there's no pipeline and there's no product. So we should really try to do something about that. And then obviously there's impacts in different asset classes, but I think that would be too long of an answer, but we can go into that later if you want.
I think it's a fairly common complaint we hear about quite a few markets. Licensing and administrative challenges are too complex, must be simplified generally. And Andrew, with having a view from outside Iberia, and although the conference is obviously focused on Portuguese real estate, we are talking in the context of Iberia. There has been a trend, and I might ask Mark to add in this, comment on this later, but there's been a trend recently of Iberia seeing people participating in both markets. Perhaps more Spanish investors participating in Portugal and the other way around. Do you see Iberia as an entity from outside Iberia, or are they two very separate markets?
So the investors that I speak with are country agnostic, region agnostic even, talking less about the countries they choose to invest in and focusing more on the big thematics. And we've been talking about those thematics certainly today. I think a key thing that we've seen recently is a broadening in the diversity of the investor profile in Portugal, in Spain, and I see that continuing. There's a lot of pent-up demand to get money into the market, and I think specifically of Korean investors who were a formidable force back in 2018, 2019, looking for a bit of yield advantage, moving into Eastern Europe, more peripheral markets. They've been on the sidelines. They've been unable to travel for the last year and a half, and are signaling a strong interest to come here. I think also just the diversity of risk. We learned earlier that investors are showing a greater receptiveness to risk, developing product, and there's clearly a number of themes that are developable in a market like Portugal, certainly Spain.
Okay, Marta, what's Nuveen's view on this?
Usually investors land first in Spain, that's a fact. Obviously it's a big economy, one of the biggest in Europe. And then slowly they tend to go more onto Portugal. What we try, but Portugal will never be a big chunk of the pie chart. It will be a complement to Spain. What we see is, and we look for best relative value. So basically we are competing, as you were saying, more in strategies rather than countries. So we are competing for the capital to invest in certain types of strategies, which also compare to returns in some strategy in Germany, for example. And usually for Southern Europe, investors are looking for these type of strategies with a sort of a premium, and especially for Portugal. So we are looking for going into the sort of double-digit return for Portugal. And one of the issues that we are seeing is that sometimes, given the current circumstances, and I'm going back to the licensing, which is it is an issue. We sometimes have to accept more risk, and we go up, and sometimes you have to go up the risk curve to obtain those returns. Sure. And this is a fine balance and a complicated one to get to a final point, though.
Very good. different question to be fired for it. Both David and Pedro. Really, time to talk about trading, buying and selling of assets. Is there time to buy, time to sell, to do both? And what sort of assets would you be buying and selling? Pedro before David?
Okay. That's good.
He needs time to think.
I appreciate that as well.
Well, of course, that depends a lot on the strategy of each investor. As previously was mentioned, it also depends on the, let's say, required return capital each investor wants, because sometimes on the cycle, and as Volkert was mentioned, so some guys cannot invest and have so much opportunity to have opportunistic deals to do. But going to sectors, I would say that, of course, now what was the ugly duck of the market, which was logistics, is becoming like the best bride. Everybody now wants to buy logistics, ugly property, very outside cities, and etc. We, on Square, as we have a balanced portfolio, we are, let's say, in the last 2 years, we bought logistics, offices, retail, and hotels, and assisted living. So I think that gives you a sense of what we are doing, and that we don't look so much for the trends that many times foreigners bring. And we know that 90% of the commercial real estate investment is foreign, so sometimes they bring the international trends, which sometimes will occur as well here, but sometimes don't. So we, being a local and working at the market for a long time, we can see where are the best opportunities in each sector, and we are achieving to do deals in each sector as well.
Would you like to highlight a stellar, an exemplar sale or buy that you've done over the last couple of years?
Well, I don't know what is example. Of course, some of our deals are our acquisitions are public. So if you go on at the SEC site, you can consult.
What's your favorite deal then? What's the favorite deal you've done in the last couple of years?
Well, we just concluded an acquisition of a 5-star hotel in Oporto in a sale and leaseback. So it is very good, long term. We managing an open-ended fund. From one side, we are pressured to buy every time deals because, happily for us, we have money coming in, and people put money because they like the return. And if we don't conclude deals, they are going to cash out because they don't have the return. So in a certain way, we are more pressure. On the other hand, because this is not a term vehicle, so we don't have to set up a business plan where we have to exit in 3, 5, 7, whatever time. We are like a little bit of Chinese, you know. Time doesn't count on us. For me, it counts because I'm getting older. But for the vehicle,
you're alone in that.
I would like to have the same. But you know, I learned with Chinese that they don't fight. They don't fight for themselves. They fight for the vehicle. So for the vehicle, it's very good to have a 20 years binding lease. And if the asset, the value is good, then someone else in the future will come to get the value on that because we don't have to exit. And that is a very big advantage.
Yeah. David, have I given you enough time to think about an answer to that?
Yeah, you did.
Great.
Plenty of time. Thank you. I'm going to reframe the question, if you will, because for us as a REIT, REITs are not trading vehicles. In fact, set up not to be long-term holding vehicles. So for us, the question is more about buy versus build. And I think, as everyone knows the story of Merlin, we came in and were big acquirers for the first 4 years of our life because the market at the time was very beaten down, in Spain particularly. And so we thought that there was a real advantage to buying at that time because valuations looked quite attractive. And as the market evolved, we looked and said, well, that's becoming more and more complicated, yields compressed, rates went up, and so the acquisition became more and more challenging when you looked at the long term. So we said, now maybe is the time to move in to start creating product. So now when you look at what we're doing, we're really developing warehouse logistics, which we have been for the better part of 3 years. And I think it's more of a development game because you can get about a 200 to 250 basis point premium on development versus acquisition yield, as the acquisition yield keeps getting pressed lower and lower. And these are land banks that we've built up over the prior years, so the margin in that is still quite attractive. So we just completed one here in Lisbon. We're starting another one as soon as the authorities give us the permits to do it, which I don't think is going to be quite long, frankly. We've been working quite well. Doing that as well in Spain. And then the other is looking at the whole data center activity, because we looked at that. It's actually ancillary to warehouse logistics, because the movement of data follows the movement of goods and the like. Fiber runs along highways and rails. Obviously tends to come into port cities, so Lisbon, Barcelona, Bilbao. And so you'll find that logistics land we owned actually had a lot of fiber as well. And so with this movement toward, everything is moving to the cloud. You look at all the enterprise business, Salesforce, Oracle, SAP, you're moving enterprise to the cloud. Everything is streaming. No one watches television anymore. Netflix, Hulu, Disney Plus. So, and then you've got the advent of 5G. You know, I'm clearly of the belief that that you've got a long tailwind of movement of increasing demand for the storage of data. And so we looked at that and said, ancillary to logistics business, we have the land for it. Let's find the right partner, which I think is key for a non-specialized developer. You know, you have some of the specialized REITs out there, Equinix and Digital Realty, they've been doing it since the beginning. But if you don't have that specialization, you'd better find someone who does. Yeah. We were fortunate enough during the pandemic actually to find someone in the US who had that experience. So their experience and history married with our capital and locations really said, let's move into that business. And so we've got 4 projects that we're currently involved with. Again, one here in Lisbon, the other 3, one in Barcelona, one in Bilbao, and one in Madrid, and that's a big part of what we're doing. So we think that the development game in both warehouse logistics and in data centers, that's the best allocation of our capital right now, rather than continuing to acquire either offices or warehouse logistics.
Okay.
That said, I think that's a good game, and there are a lot of people for whom I think so much capital out there. You look at the yields available in real estate, you look at where the inflation story is. I do think there's quite a good story in the long run for the real estate and hard assets in general. I just think the yields are a little bit better on the development side.
Come back on a couple of aspects you said. I mean, in my early days, the shed boys, the people who did logistics. I
hate that word shed.
I know.
That's what we have in our back. That's why I store my tools in the backyard. That's not where you put volumes of goods.
I met another friend, I can see. But the days when they called them sheds, they were the simple things to bung up and, you know, to run, to manage. I think it's so much more of a specialist, complex industry. Logistics in this moment is an extremely complicated operational business. You've got to get it right. And I think real estate logistics is beginning to, well, it's having to get involved with that trend and understand the operational side of logistics, like some of the alternative assets categories we've talked about before. The other interesting point you made was that was development. As real estate people, more probably you and I, and we're all enthusiastic about development, building 21st, even 22nd century product is much easier than converting older product. You can get better returns, but then you come up against the type of capital, the shareholders who are invested, who are probably dividend driven and complain about the drag on dividend if the percentage of development activity is too high. How do you manage to achieve a balance with that?
Well, you just said the right word, and it's balance. I think it's very difficult to be a public developer. But if you have a large portfolio, 11 billion of assets, and so you're adding the development as an additional yield enhancer on top of an existing portfolio with the right leverage, then that's fine. In fact, a lot of the public shareholders are pushing companies to find more. You were talking always about rotating capital. Sell the long-term dry assets and redeploy that capital into something more interesting. And for us in the last few years in Spain, that was more refurbishment, redevelopment. Right. We had what we called, converting. What I said was converting Class B buildings in Class A locations into Class A buildings in Class A locations, and bringing in 21st century technology to those buildings, because I do think the trend as well is going to be, there's going to be a big differentiation between those buildings that are modernized, efficient, sustainable, and those that are not. And over the next 10 years, you're going to see that gap, I think, get wider and wider. And those owners that don't have the capital strength or the capital position to do that, I think are going to get farther and farther left behind by those who do. So we were big in the refurbishment in Spain, but I think as long as you keep the ratio of what's growth versus what's stabilized in a public market, you'll be fine. We're generating a 4.5% dividend yield and giving growth through development. I think that's
only 4.5, was it?
Only 4.5.
Oh dear.
We're trying. We'll try harder, but you know, I think that's the story.
I'm going to move on in a minute to retail, just to give you a chance to think. Andrew, I see you nodding away at several things David was saying. Would you like to chip in there?
I mean, I see some similarities to the core fund space in Europe as well, with core returns under significant pressure. The way to improve those returns is to do something different, to add value. And some of the successful stories we've had have been refurbishment plays in Spain. There's no reason to suggest that that wouldn't be possible in a market like Portugal. I think there's also the really important piece that I introduced today, the ESG side of all of this, and embodied carbon. And so the refurbishment of buildings not only is necessary, but will be looked on much more favorably by investors, by lenders, rather than brand new ground-up construction. And I think that that's a long-term trend to embrace.
Okay, thank you. Now, I mentioned the word retail, and can we just have a show of hands to remind me, who has retail in Portugal? Didn't need reminding, did I? But just wanted to make sure I was right before putting my foot in it again.
And maybe just to add to that, just proud owners of Portuguese retail.
Yes.
Very good. All five of you are proud owners. Thank you very much. No, retail has been a sector which has been talked about. One of the sectors badly affected by the COVID restrictions. And from where I sit, Portugal has put in place regulations which are criticized, let's say, more by the international retail community than in certain other countries. How has retail suffered from these regulations? Martha, do you want to try that one?
Well, definitely our shopping centers are suffering from these type of regulations and the final income. I think that these regulations are not considering our capacity to negotiate one-to-one with each of the tenants, which is something that we've done in Spain. So we currently have 1,000 leases, and we have negotiated with absolutely all of them. So regulating these type of things is it's not the optimal.
Is that a polite way of saying it's no good, not unhelpful? Okay, go on.
Agree completely. We in Spain took a view. We put a commercial policy in place. We negotiated with one of our tenants, very highly accepted and worked very effectively. We've done the same thing in Portugal, and the government decided to come in and just say, no, it's going to be different for everybody, this for everybody. So it was working very well. Suddenly became an arbitrage point for the tenants between, well, we have a deal with you, and now we have this mandate from the government. And so it made it very difficult for us to work within Portugal. And Almada, which is the only shopping center we own, it's got the biggest footfall drop of all the centers we own. So, so it was very complicated for us here in Portugal. Now that's hopefully all coming to an end on October 1st, which is the other thing I think is fantastic. It's on September 30, everything's terrible, but on October 1st, it's nothing. You can go back to normality. It's like, I don't know where that comes from, but so the idea of imposing these top-down restrictions versus allowing the market to negotiate on its own, I think was something that we would prefer not to have had happen.
Pedro, Volkard?
I think it's a very naive and ill-conceived law from the very beginning. I think they tried to protect mom and pop shops, and the outcome is that suddenly Inditex is not paying my rent in a tiny shopping center. So I don't know who's more powerful there and who would probably deserve more protection. So I think when you try to intervene in the market, those things happen.
And Pedro, in Portugal, have the rules been nationwide rules, or have they been region by region? Significant differences?
No, I would say it's a little bit about the same. In our case, let's say, the bad news is what all of us we feel, because we are also dealing with different retailers in different cities. Although the good news is that we have a diversified portfolio. There is retail and retail, so we have shopping galleries, but we have supermarkets that have been closed as well. And mainly because the shopping galleries were about 27% of our portfolio, which is, it might seem too high now, but it was not that high. So
no.
the outcome of that is that in 2019 we gave a return of 5.5, while in 2020 we gave a return of 3.6. Let's say 1.9 in 800 million euros of portfolio. It's like 16 million euros less income, which is a lot. And mostly 90% of these 16 million euros came from the shopping galleries due to this. But that's life. I don't feel that the lesson to take from that is it's bad to invest in retail. I'm sure that retail is going to come back and shopping galleries are going to come back again. So the secret is to have the risk spread so that we are not exposed to any specific sector in any time.
Okay. Andrew, I said my perception, the messages I get is that the international community feels the rules are amongst the harshest in Portugal. Is that how you see it? And do you think that will have a longer-term impact on inflow of capital into retail in Portugal?
I mean, I appreciate this is a very sensitive topic locally. And when I look around Europe to see whether this has transpired elsewhere, Portugal really is the anomaly. Maybe we could say Poland to a degree as well. And whilst the view towards retail broadly is becoming more constructive, and investors are opening up their eyes to re-entering the sector, making acquisitions in the sector, I think they're going to look quite carefully at a market like Poland, like Portugal, having seen the recent experience. That may imply a higher required return for coming here. And so, we just got done with our forecasting process. We increased our outlook for total returns in Portugal for retail, but we've also increased our required return outlook as well. And so net, it's kind of the same position. So I do worry from that regard, absolutely.
Okay. I would like to throw it open to the floor. If anyone's got any questions for this lady and these gentlemen, yes. I see Pedro Silveira, I see another one over here. Have we got a couple of microphones going around, or is it just one?
We will have three. I do not.
You're not allowed to ask a question, Antonio.
One question. Yeah, I was trying because I didn't want to resist. I've been waiting 2 years to do this question. 2 years ago, Francisco and the agents come to this room to say, believe on our lips, we will see office rents at 30 euros. And my question to Francisco and to the panel is that do you agree with the audience that rents will increase and the sky is the limit?
Well, in fact, we said 2 years ago that rents were going to go to 30 euros per square meter. And you know what? We were right. If it wasn't for COVID, of course. But I was a true believer of that. I'm still am. And I think, of course, COVID had an impact there. But I was visiting an office in Liberdade last Monday, and the rent that the tenant was paying was 28 euros per square meter. And in my view, that office with a fantastic terrace is worth 30 euros or more. So definitely, I think we're going to get there.
I think the first hand I saw up was somewhere there, and then I think I saw Pedro. No, it was a hand somewhere here. Here. No, okay, the other way around then, sorry.
Thank you very much. Andrew, I have a question for you. I tend to agree with what David said, that it's possibly a better game to develop as a way to enhance returns rather than going to a very crowded liquidity and people looking for purchases. But at some stage, I think I heard you saying that there's more interest by investors and more money into refurbishment than new buildings. First of all, what kind of assets are you talking about? Is it, offices or residential or whatever? And second, could you explain better why you have that rationale? Because I kind of disagree with you, so I want to learn from you.
Yeah, I think it's going to come from regulation, that it's going to be increasingly difficult to develop new land. And this is part of the decarbonization agenda. This is really coming at a European level. So much of our built stock is energy inefficient, and we need to do something about it, and we're already too late. So I think that the ESG, and again, sorry to keep belaboring that point, but it is fundamental, and that will be the driver. In terms of the sectors that benefit, well, I think it's all of them, frankly. Offices are where we see the greatest opportunity, and there's a dual edge there, and that's both on the ESG side of things, but it's also creating product that we want to work in post-pandemic. Because a lot of the old stock, the pre-pandemic stock, if you will, just doesn't look that appealing anymore. And so one way of getting people from homes back to the office in vibrant locations where you may have old buildings is to refurbish it. I think on the logistics side, that's another key one. Especially urban infill locations where a lot of occupiers, they need to be in dense population areas. Often these are difficult areas from a congestion point of view. They may be old, ugly buildings today, but they're fantastic locations. And so refurbishment, repurposing is really attractive, and I think Portugal is really attractive in that regard.
Good. I know there's one question here,
yeah,
but can I take 2 or 3 quick questions addressed to each a specific person so we can kill them quickly, please? Go on.
Myself? Okay. The question is about the retail mainly. If I was speaking with my friend from Barcelona, and from EP, and we were talking about the opportunities that we have now in our market and how it is the prices now after the pandemic. And in the retail, maybe nobody wants to put the hand up, but in the last 2 weeks, I have 4 meetings for the only commercial center that we have. It means that the people are aware that the opportunity is now, because those prices is going to be up. The people after the pandemic will restart buying again, restart going to the malls, and the sellers on the internet and so on. Okay, they will continue, but they want to see. They want to see the artists, they want so on. So I don't know if it is every different kind of business or not, but I'm sure that the malls, if they transform as they were before the pandemic, and the people is going to return. So I think not only in retail, but in some of the segments, now is the time to buy. And you saw that the prices will go up in 2022. Most of the people answer, put it that, not only because they wish to, but they believe for sure that the price will go up. So the only thing is not really a question, it's more that to say that the time is now. If you don't buy now, the retail will be going up, So what you have to do is to study very well where are the places that there are aggregate value that you can join in 1 year or 2 years.
Hopefully everyone in the room will agree with you. I'm sure very, very solid comments.
I agree with Jose, actually. Shopping centers are back. So if you look at the numbers, really, footfall is still below the pre-pandemic times. But when you look at the sales are actually a lot better. So, and in a country like Portugal, people actually like to go to the shopping mall. I only own 2 shopping centers, so it's not that I'm very invested in it, but I think that there is a lot of interest in
when you
in that
net
right now.
out the restrictions that some people are still suffering in their activities, sales are looking very positive.
Exactly.
But I think it's
Gentlemen
more about...
there.
Yes, first of all, I would like to thank these very distinguished guests for their speech. And the common thing was the licensing process. Everybody was complaining about that. And I would like to turn to the audience and ask if there is anyone from the municipality side. I believe they should have been listening to us. Are there? Yes. Because as a foreign investor who have invested a huge amount of money in this country, we are coming from Turkey. We are the largest residential developer in Turkey called Yapı. And we want to grow our business here. But since this allotment, PIP processes, etc., we are stuck and we are lost. And we have lots of project management companies that we are really consulting to the best. And everybody's saying it's an uncertain thing. We can't tell you, we can't give you a time. So you have to keep waiting, maybe 5 years, maybe 2 months, maybe 1 month. But this is not the way the foreign investors should be handled. If you look to that board, it says 67% of the investment is coming from foreign investors, including us. But this frustration is too much. In the same period of time, we are selling 1,000 units every year in Turkey. And we're talking about just 50-55 units that we couldn't realize since 2.5 years, just with the allotment. And therefore, I really appreciate if, with the change in the municipality, these things are really addressed more properly and more investor-friendly, so that you can see more faces from the other parts of the world, including Turkey, to really bring some additional capital to the market.
I think the new mayor here is a good friend of the sector, as I understand it. He has supported events of Iberian property in the past. I'm sure those words will be conveyed to him, and hopefully you'll have the opportunity of even being able to debate that directly with him one day.
Definitely would like to visit and thank him.
He was invited, but unfortunately, with the proximity of the elections, he couldn't be with us today. But I think, was it Porto I saw over there? Yeah, I'm sure the message has been taken over there as well.
Sorry, I hope I didn't disturb you with my question, but thank you for your understanding.
So we've got to move on. Pablo, you said a quick question or comment? A genuine question.
A truly question. Well, my question is for the investors. I'm not going to dedicate the question to someone specific because I have 2 questions. I reduced to 1 to make it global. So my question is the following. At what extent do you realize, are aware or notice that your business depends less on square meters and cash flow and more on variables that we don't control? Francisco mentioned the megawatts, the oxygen in cubical meters. We are not at this standing, but nevertheless, I would like to hear from you on this. The ESG that you mentioned, how do you accommodate in the equations of your decisions? That's my question. Thank you very much.
You want me to be shot for overrunning by the sounds of it, Paolo? That's a very simple question. Anyone want to jump in? Pedro.
Well, I would say all of our life depends on external variables that we cannot control. And so what we have to do is to do our job properly, according to a professional way and the most way of managing to get return, but we have to be sure that there are a lot of variables that we cannot control, either natural, as we can unfortunately just understood from now, but others like regulatory, licensing, etc., the government on the shopping centers. I mean, some variables we can, let's say, predict and try to mitigate, as we say today, but there are a lot of others that unfortunately we cannot predict at all. So we try to mitigate as much as risks as we would like to do it, but there is always a kind of, if it's difficult to measure that on the Excel, I know, but we should have a cell to unpredictable variables. Yeah. Just to add something on the previous question from Antonio, I know, as I was mentioning also, I'm getting older, but a couple of years ago with Volker in another conference, I know that probably in the room only me, Eric, and Pedro Seabra knows about that. All the others, they are too young, they don't know. But 30 years ago, the rents in the offices, and I know the environment was different, were 37 euros per square meter.
Yep.
So there is a lot of space to grow until what it was 30 years ago.
I was going to bring it up now, so that's my favorite anecdote, actually.
And Volker thought, well, I learned something.
I use it very often. I quote you very often there.
David, you were wanting to add
Just
something.
one thing. It's always about cash flow and value. I don't think, but now there are more things you need to think about to how you create cash flow and value. And the one thing that I think, when you think about ESG, take a 10-year view, I think what you're finding is there are more and more tenants that will not even go into your building unless it meets sustainability, because they have public images that they need to project. And so they will not go into your building unless it meets those characteristics. On the investor side, they won't buy it unless it meets these particular characteristics. So it's still about cash flow and value, but if you want to capture that cash flow and if you want to generate that value, you'd better be doing those things around sustainability and all of ESG, frankly. Otherwise, you'll be left out completely, and then you'll be fine. Then your only buyer will be the marginal buyer, and the marginal buyer never pays the right kind of price. So that's what I think we think about, is what do we need to be doing to all of our buildings, all of our assets, in order to make sure we're really focusing on being in the mainstream of tenants and buyers.
This market session can go on and on. I'm just going to ask both Andrew and Marta one last quick comment, if you want to add anything on that point, and then I must close.
Yes, I just wanted to comment that real estate is more like buying into occupiers now than buying into real estate, and one side of ESG, which is absolutely key, as you've been commenting, but the technology piece is absolutely key to understand the end user and all of the data that we have, because the data is out there, and being able to partner up with companies, with digital operators. That's something that we're actually doing to try to understand all of the data, so we leverage on their technology and understand how and what is the end user doing. That also has an impact.
Andrew.
Start with the customer. Give them the best experience possible, right? That's offices that are better than home, retail that enhances the brand, logistics facilities that retain staff, and in the residential space, creating it for the widest group of individuals who can afford it. And that's the answer. It may be more space, it may be less space, but it will be demanded space, and that's ultimately what we want.
Volker, did I miss you out? Did you want to add just one last word?
I mean, I agree that everything is, you should certify the buildings, that the technology is important. That works well with 37 euro rent. It works, it's a bit more difficult with 12 euro rents in the Western Corridor. So I think you need to find the balance of how much capex you spend and what type of certification you get. I agree that you need some sort of certification, but you need to be careful in finding the balance and not overpaying for something that at the rental levels that we have in Portugal is going to be difficult to get your payback.
Time goes when you're enjoying yourself, doesn't it? How this market session is popular with the real estate consultants and this excellent panel. We could go on, but I'm afraid we haven't got time. All of you, thanks very much indeed for your contribution.
Thank you very much. Thank you.